On August 8th, Medical Properties Trust reported their quarterly report. The stock dropped 14% and now yields over 13.65% on dividends alone. What happened? Hello, everybody. This is Chuck Carnevale, co-founder of FastGraphs, the fundamentals analyzer software tool, a.k.a. Mr. Valuation. I'm going to do a quick update here on Medical Properties Trust. I've been asked by several subscribers to look at it, but I'm going to make a couple points. I did an article in May 23rd of this year on Medical Property Trust. I normally will not do an update. I'm going to say it's very clear. I'm going to say it strongly again. I will not normally do an update on the stock for at least a year or two after I do a video, because I'm a long-term investor and it takes a long time for stocks to generate and create value. Now, if something material happens, like there was a massive dividend cut or a collapse in operating results or something, I may do an update earlier than that. But typically, I will not look at an update for at least a couple of years, sometimes even 3 years, because I intend to hold a stock for that period of time or longer. Okay, the other point I want to make here is that nothing really happened on Medical Properties Trust. So I'm going to do a quick update. Let's look at what really went on with Medical Properties Trust and how the market has reacted so much and try to discover what really has changed. So let's go to FastGraphs. Number one is, this is the operating FFO, funds from operations of the company. Now, I want you to notice we are expecting a drop this year, which has put pressure on the stock, but the drop is expected to be about 15% to $1.54 from $1.82 of FFO last year. By the way, 6 months ago, the estimates were a little higher at about $1.57. And 2 months ago, when I did the video, it was about $1.57. So this changed very slightly by 2 or 3 cents. This 2024 estimate changed by a penny, as did 2025. So nothing has really changed here. And my original thesis is that I believe the company is worth this orange line. Okay, now historically, for the last several years, it's been trading below this blue line. So even if I look at the blue line, I would argue that this stock is worth $18 a share. Argus did a recent research report. They think it's worth $13 a share. But I want to go over what happened with the stock in the short period of time. So this is May 19th, because I only do weekly closing prices here. I produced a video on May 23rd. Okay, the stock was trading at $7.90, I think. This price was $7.68. This is what happened since that period of time. Now, I want you to look at this, focus on this time frame right here. Nothing has really changed. The price went up to over 10, right after, through July 21st, after I published the first video. Now it's back down to 850, and it's down a little bit, I think, some more today. But this is all you're talking about. This is that 14% drop. Nothing's changed. Very little has changed on funds from operations. Now, I prepared a Word document here because I want to go through the financials. What happened to the company was they sold a bunch of hospitals and so on, so they had a very large depreciation charge. This is a non-cash charge that was almost triple what it was the year before, or in the June quarter of 22 versus the June quarter of 2023. All right, their normalized funds from operations actually increased to $285,312,000 versus $274 million. Their adjusted funds from operations, AFFO, also increased to $242,870,000 from 212. Their funds from operations per share went to 57 cents from 46 cents over the last quarter, and their normalized funds from operations was 48 cents versus 46 cents, and their adjusted FFO was 41 cents versus 35 cents. And now, the 6-month period, there was a little bit of deterioration, but I want to point out to you, as I pointed out in the chart here, we've already expecting this deterioration. This reaction of a 15% drop created this enormous drop in valuation of the stock over this time frame. So let's calculate that. We had about a 15% drop, and I'm going to try to find as close as I can to 2023's beginning here. So we've had a 15% drop there, and we've had a 35% drop in the stock price, twice as much stock price action as we actually had funds from operations. And actually, we had good funds from operations. So the bottom line here is I still think this stock is no different than I talked about it May 23rd. I think the earnings were good. The real question is whether they're going to cut their dividend or not. Even if they cut their dividend, they wouldn't eliminate it. They might reduce it somewhat. But I don't think they're going to right now because I think their FFO is clearly covering the dividend. The dividend has remained consistent during this whole period of time. So we're getting the income level we were talking about in the previous video is still there. And you can buy the stock today once again at below $10 a share. Argus, like I said, values it at 13. I value it at 18. And right now, I'm not planning on making any changes in this stock for the immediate future. And to me, nothing has changed. And, you know, when you really just study this price movement right here, if you all will, nothing has really changed. This is what the stock, I think, is worth. This is what it would be worth on a negative sentiment. Both of those numbers are significantly higher than what the stock price is trading at now. Anyway, this has been Chuck Carnevale. I hope you enjoyed this update on MPW as reluctantly as I was to give it. Again, it's way too early for me to be talking about this stock again. I want to see 4 or 5 or 6 more quarterly reports come out, and I want to see a major deterioration or a major cut in dividend before I'd want to talk about it again. Thanks for watching. I hope you enjoyed this video. If you did, hit this, ring the bell, subscribe to the channel if you haven't already. And for goodness sake, take a look at fast graphs. If you're just looking at stock price, if you're just, if all your opinions are being driven by stock price reality, just look at stock price on a graph, how volatile it is compared to how the operating results are much more consistent and the dividend even more consistent. Thanks for watching. Talk to you again real soon.